Hit it, Craig.
Just one of the things I love about Twitter, I guess we have to call it X now, is that it's a meritocracy. You have to add value in order to get followers. It's not about the great dish that you had at the French Laundry or the luxury seat you have on the PJ. You actually have to give it before you earn it. And that's how we met our next guest, Mitchell Baldridge. He's a CPA, but you're prolific on Twitter, like my boy Peter here. He's a Twitter maniac now, or an X-maniac, you should call it. And you're just giving out massive advice and really good stuff, actually. Like, holy shit, it was amazing. And I reached out to you and I said, I want to jump on your bandwagon. Like, how can we work together? Because the most common question Peter and I get asked is, who's your CPA? Who does your bookkeeping? Who does this? Who does that? And we don't really have a person. So it was selfish interest to help me and help Peter that this relationship was born.
Well,
so
we have people, but we've gone through it realizing, like, we've fallen for this trap in dentistry, Mitchell, where we feel like, well, I'm going to go with a dental CPA because I feel like they'll know more about my specific industry. And it's a complete disaster.
It is.
Because they don't really they're not actively looking for all the things that, one of your posts that I love that actually confirmed that you were the guy was I obsess about ways to mitigate taxes for my clients, right? I'm looking for ways to avoid, defer, and minimize. And it's not what you make, it's what you keep. And I was like, this is my guy. This is my guy. So we'll jump in. But yes, this was founded on Twitter, and now here we are live. So
awesome, guys. Thanks for having me on. It's been great to meet you too, and to kind of get into the Bulletproof stuff and learn more about what y'all are up to. And it's funny. I have a lot of. So yeah, I'm Mitchell Baldridge. I'm a CPA and a financial planner. I'm from Houston, Texas. Run a couple CPA kind of niche businesses that we'll talk about here. But yeah, there's a lot of talk out there in the accounting space of how to bulletproof your accounting firm. And I mean, everyone wakes up in the same spot of they're like, look, I'm a technician. I'm really, really good at what I do. I know how to cap teeth. I know how to, make people smile, look beautiful, but yes. I'm on a treadmill and I don't know how to run my business. And believe it or not, accountants wake up in that same position all the time. So, 3 or 4 years ago, I kind of found myself in that world of I need to figure out a business model and a business plan within my accounting firm. And that's part of, frankly, what brought me into Twitter. And it's funny that when all of these, they all say you need to niche down as an accountant. And apparently the best niche in the world is dentists. All these dental,
aspects, real estate and practices. And it's all the,
because typically our business due diligence is like, I like that guy. I get a good feeling about him. You know what? I'm going to buy a shit ton of life insurance from that. I just like him. He's a good golfer.
He goes to my country club. Yeah, exactly. And so, so accountants love dentists because I think the practices are somewhat uniform. And so what you guys have done is a fantastic job of like layering a ideal model P&L on top of a regular dentist practice. And that got me excited to work with you guys because, we kind of think alike and maybe we can merge our talents and help a bunch of people. So that's exciting.
Yeah. I want to remark on a story that just happened recently. I was talking to a listener of the podcast, and she was contemplating joining the mastermind, and she did, and she's awesome, and I love her, and I don't want her to think of this the wrong way when I mention her, but she did have me talk to her air quotes CFO, who I think she's subsequently fired, as a precursor to joining to make sure the value proposition was right for her. And just going through very cursory, works with dental practices and plastic surgery practices. I'm like, okay, so what are your stipulations for goals? Like, what is the percentage of overhead for marketing or for staff salaries or blah, 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 blah. No answers whatsoever. So I think the dental CPA attractant label is really powerful because you all can speak in the language. Like, did you buy a Nomad, or was that an instrument, or was that a capital expense, or
sure,
but beyond that, saving dentists from paying lofty amounts of taxes is really a subspecialty of CPA work. CPAs pride themselves in deciphering the tax code and knowing what to pay, but it's a total separate endeavor and seemingly unrelated to being an accountant to do tax planning. Like it's a whole separate thing. And I didn't know that for the first decade of my career.
Yeah.
Mitchell, how big is the tax code? And Randy, one of our favorite Uncle Randy's, we have someone who speaks to our group on financial acumen and stuff like that. And he says, I think the tax code is like, what, 6,000 pages or something?
Yeah. I mean, it's a monster.
And 30 of them are designed to, here's how you file taxes. The remaining balance is, here's how you can
Don't
write
have to pay
things off.
taxes.
Right.
Yeah. Government incentives, which
Government
novices
incentives,
call
here's how
loopholes.
you can do it. Right. Yeah. And so that's where I get frustrated, or have been frustrated with CPAs in the past, is that it seems like a CYA business, right? Because you're the one signing the return and they're like, yeah, this is good enough. I won't get questioned. Let me just sign this and submit it. Versus like, I want someone who's like you, obsessed in the night about like, you know what? There was a strategy we missed in blah, 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 right? We didn't take advantage of this research credit. I didn't tell my person to do a cost segregation, like all the things you're going to talk about
or the
today.
Masters rule or the Augusta rule and all these little things
that
you don't learn.
Right. And like, I want someone obsessed because like you said in your tweet, it's not always what you make, it's what you keep. And taxes are the biggest expense of our life. Full stop. Full stop.
And to your point, tax is really, really simple. All income, all sources. So if you're walking on the beach in Bali and you reach down and pick up a gold coin, the U.S. wants to tax that. That's now 30% theirs, or 40% or 50%, depending on where you live. And then the government provides this thing called legislative grace, where you may get to take some expenses. So when you go pay your dental hygienist, you get to write that off, and then you wind up at some kind of simple cash basis income in the door minus expenses that it took to get that income, and that's your starting point in my world. And if we can get you to there, then we can start thinking about
the stopping point at many others' worlds.
Yeah, 99%. That's the stopping point. And since we're dunking on CPAs, I'm just going to add to it. The other thing that just really drives me batshit crazy, and I'm going to let you unwind on this one.
I know where you're going with this.
I'm sorry. It just drives me crazy.
So
the dentists have a CPA. They met him at the golf course.
Let me ask my CPA.
Yeah. So somehow by the three letters behind your name, CPA is not MBA. Right. And there's a lot of CPAs that work out of their mother's basement. Mitchell, if you're there right now, please accept my apologies.
Mom, where's the meatloaf?
Meatloaf.
Yeah.
Settle down, Mom. I'm on the phone.
No, but like, it's like they're not business people. So what strikes me immediately when I started reading your tweets is like, holy shit, this is a real business person. Like he really understands and all these intricacies, and you're actually giving business advice. But we bump up against these CPAs that are giving business advice to their dentist clients, like saying things like, you're paying your hygienist too much money. Based on what? Based on the dollar amount that she's being paid, when in actuality, as a percentage of the sales she's bringing in, she's actually the biggest profit center you have. But empirically, they're saying it's just too much money. I've never heard of that. And therefore you should fire them.
Yeah. Give them a raise, because every dollar you pay them makes you $5.
Right. Or you have one that's empirically making, half of that person, and you're actually losing money. So the myopic perspective of the CPA, like looking at the line item and not the business. And frankly, I don't know if you're trained. So I'd love you to speak to your traditional CPA background, and then what you learned after, or how you came upon being such a well-rounded advisor, if you don't mind.
Another one of your pet peeves, though, just to give more context, because I thought you were going there, is we've talked to a lot of people when they're having to make decisions about their business, right? Whether like Craig said, that the salary or this, do I expand? And the default is, well, let me talk to my CPA and I'll get you an answer. And Craig's like, at what point has your CPA ever owned a dental practice, or has something of scale that was like an entrepreneurial scale? And so
it's like asking a fat person how to get in shape, and listen, there are CPAs out there that are extremely entrepreneurul, and there's others that are not. So
we're on the call with one.
Yeah.
Exactly. Well, and put it that way, like, look, I love CPAs. I'm not going to rag on them. It's a hard job. It's a job that's just gotten harder and harder and harder with, the government has used CPAs as the fulcrum of giving out, economic stimulus over the past 5 years. And so through all of the COVID stuff, the CPA was the channel for how all of this government stimulus was delivered. Different CPAs had different ways of kind of monetizing that. And some CPAs made millions and millions of dollars over the past few years on behalf of all this. And some CPAs just got twice the amount of work and didn't ever know how to capture it. So like, it's a hard job. It just gets harder and harder and harder.
Sure.
Frankly, like I can say this now, but I wasn't like built to be a CPA. I'm not the guy who you really want to, if you're the dentist and you just go, look, I'm not the guy who you want to actually do the cap on your tooth. Yeah. You want me thinking in a broad way about kind of how to push the practice forward, how to push the whole process forward. And that's just kind of how I've always been. I became a CPA because I graduated college in the great financial crisis, and a great family friend of mine gave me some good advice. He said, you should become a CPA. You'll get a job. You'll get a training in business. You'll be able to do whatever you want to do. And I always wanted to be in real estate, and maybe one day I will, but we'll talk more about that. But so then, the way I became a well-rounded business person is I realized, man, I just can't sit here and do these tax returns. I'm better with people. I'm better with relationships. I'm frankly a better salesperson, a technical salesperson than I am a CPA. So I kept developing that. And then I had to somehow develop a mechanism to get all the work done that I can sell. And so then I've been slowly and scaling the work machine of my practice. And that's, I've had
really and the strategy, right? Like you enjoy the strategic part of saving your client money.
That's an important distinction. That's an important distinction, because that's what attracted, got me to read every single thing you post and oftentimes repost it, because it's the strategic stuff. It's amazing to me. And I don't want to put on my tinfoil hat, but why is it that we are not taught, like dentists, and this is a dental podcast, so a lot of most of our listeners are dentists. We are at the apex of the high education consumer we're spending up to $500,000, and we all come out and have no clue whatsoever. Like, this podcast is going to be revolutionary, the things that we're going to talk about for people.
Yeah. Here, take all your income, take all your expenses, and now you have a profit and loss statement. No one.
Right.
It's the doctor who gets all the way out of school without a basic nutrition class, or they don't.
But it's also they don't pay themselves a wage for the earnings that they do.
Sure.
So they think their overhead is 25%. So let me hire 4 more associates, and oh wait, those guys need to be paid now. I'm working for free because it's my business. So it's we're getting ahead of ourselves. But it's amazing to me that I had to learn this. I learned it late. Really late. And I'm really happy for those that are listening now that get to learn it at 35 or 40 or whatever, or even Pete's age at 60.
And so one of my business mentors who's taught me the most about business is a guy who's a roofer, and he's a friend of mine, and he puts roofs on houses, and he hires labor, and he buys materials, and he has accounts receivable. And like, he just was the guy who over a 3-year period gave me an MBA in just how to run a business, and just made fun of me the whole way. But it's been a journey for me, and
that's kind of our thesis. Quite honestly, Mitchell, I know you don't know tremendous. I mean, you know a little bit about Bulletproof, but that is kind of like the
thesis is to make fun of me.
Well, that too. The genesis was to right to Craig's point, right? Like I was like, there's enough business. There's enough clinical pods. There's no lack of information for how to do clinical dentistry. Mm-hmm. There was a lack of acumen of how to grow, how to scale, how to operate, how to build, how to market, right? How to retain people, right? The operations of it just seemed like it was like, oh yeah, just go blow and go. And so the whole reason behind our name Bulletproof was to do all these things, do these 12 steps, And it will essentially make you bulletproof from the economic climate, from the person opening up across the street, from blah, 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 from a hygienist quitting, because it just it secures you on a lot of footings versus, oh man, I got a bad review, I'm going out of business now, kind of thing, right?
Yeah,
Like
my landlord raised the rent, and
yeah, like what can I do?
yeah,
That's my profit. I'm out, And so, so it's really that was the ethos of why we started this, because like Craig's saying, we got zero training, and Craig and I joined each other because we went on different paths. We didn't meet each other till late in our career, but we shared the same war stories, the same ass kicking, right?
Yep.
The same arrival. I was like, God, man, if we could just like combine our joint knowledge and then give awareness to our community, wouldn't that be a value? Yeah, let's do that.
No kidding. So yeah, I mean, and everyone sees that in their market or in their area. Is why did these doctors all join together and sell out to private equity at 10x, and then why am I just punching myself in the face every month trying to make payroll? And everyone, everyone's trying to provide the same service and bring home some money for their family and grow their practice. And look, if you can get on the right track and make the right choices and build a fundamental business plan that makes money that you can take home, frankly, you get to hire better people, you get to serve better clients, you get to grow your business. It's a good thing for everybody. So being in any kind of like practice or in any kind of customer service role like we are is a tough business. And it really, the moat is getting great people around you and getting better and better processes. And so that's the flywheel of running any kind of service business. It's just like, we get to charge more because we do better work, and then we get to hire better people, so we do better work, so then we get to charge more. and then we get better and better clients along the way, and we get to pick and choose our clients, and we don't have to work with psychopath assholes. So
yeah, it's true. And the problem is the trajectory of a service provider, a dentist, architect, or CPA for that matter, is to get really good at your craft. So you're so good that everybody wants you. Yeah. And then you can't get somebody, or your ego's so fragile, you don't want to hire the better doctor or the better CPA, the better lawyer. And now it's a kingdom of one, and you can't scale. So
it's one guy and a bunch of helpers as opposed to a real, where you're just, again, I've become fortunate in the last year where I've got a partner in my main business, Roger. I have people around me who we've hired a quality control guy, like where I just get to go, oh, I'm no longer the best CPA here. What a relief.
Wonderful. It's wonderful because you're a damn good CPA, and and you made it as a CPA. And if you can actually attract people better than you, your customer wins. It's awesome.
Love it.
Bear with me 1 second, guys.
We're just fanning on your tweets.
There we go. So this was the impetus for me wanting to get you on the pod, and not all of this will correlate, but I was like, man, wouldn't it be good if we could do a dental extrapolation? And so there's a post on the screen. If you're listening to this in your car, there is a post on the screen from Mitchell, and it's the post, not what you earn, what you keep. Here are my 10 favorite tax hacks for business owners. So Mitchell, we can skip some of them if you feel like they're not applicable, and I may have caught you off guard. But Craig and I can help maybe do a dental narrative or dental dialogue on this. Can help with it if we need to kind of extrapolate into dentistry too. But are you cool with kind of going through these quickly?
Let's go.
Awesome.
So 10 tax hacks for business owners. I mean, this is my core deal. It's just for business owners. How do you kind of grow your business and pay less tax? Unfortunately, tax hack number 1, QBI optimization, does not apply for dentists. We are specialty service trade businesses, dentists, accountants, lawyers, a lot of these consulting businesses. So forget it. Turn the pot off.
Right.
Donor advised funds.
Number 2, donor advised funds. Okay. Go.
You go work with your financial planner or with Fidelity or Charles Schwab or Vanguard. You can go give away appreciated stock into a charity account instead of giving cash. It's a double dip, because if you bought Tesla at $10,000 and now it's worth $1 million, you can give the gift of Tesla to a charity and never have to recognize that gain of $990,000. So you don't have to sell the stock, pay the tax, and then give away the net. You can give away the gross and never pay tax.
And that's a charitable deduction.
And it's a charitable deduction at the gross amount of the value of the stock. And it, like I say in the tweet, if you love the stock, if you want to own $1 million of Tesla, you just get to go buy it back. S corps.
Number 3, S corps.
So one of the big reasons S corps are valuable is QBI. Unfortunately, that doesn't matter for us, but it still does matter because dentists can make a whole lot of money. And what S corps allow you to do is set a fair market salary for you. So you get to pay yourself in lockstep with the comp plan of the other associates in your practice. And, if you follow this Bulletproof P&L, you're still going to have 30% carryover as a net earning to the owners.
Mm-hmm.
Well, you don't have to pay Medicare tax on all of the earnings of all of your practice at 3.8%. You get to pass that out as a basically an owner's draw, and it's just not subject to Medicare tax. So even without the QBI benefit, which is awesome, you still get the Medicare benefit.
Hey, Mitchell, let me jump in. Sorry for 1 second. The minimum amount, I know it changes. Is it right around like 162? And where's that number found? I always hear that number thrown around.
Yeah, that would be so the minimum would be the Social Security max wages or max withholding, which is on 160,200 in 2023. So you're dead on. So you say that's the minimum because anything you pay yourself less than that, you're not paying Social Security tax on. And if you're a doc, the IRS is going to come to you and go, wait, you're a dentist who is paying a bunch of people $250,000, yet you make $80,000. We don't believe it. So
yeah, a lot of dentists are doing that. They're paying themselves like 40, 50 grand of W-2 wages.
And you can do that, but your exposure exists from 50 grand to whatever the IRS deemed fair comp would be. So, I don't know. I haven't heard you guys talk about this, but just the idea pops in my head of you should pay yourself on the same comp structure that you pay every other associate in your office, just because
that makes sense.
That's to your point, Craig, like what would it cost to replace you? Well, you already know.
Right.
But number 4, this is
do we have like a drum? Do you have that sound machine?
This is my favorite. This is how I live my life, Mitchell. Number 4, bonus depreciation.
The big air horn.
We need that.
So yeah, bonus depreciation. The eighth wonder of the world.
I got that.
Oh. The crowd goes wild. People love bonus depreciation. I don't know what it is. Like you want to get a party hyped.
Yeah, when I go out into the world, people are stopping and talking to me about bonus depreciation. And
amazing.
That people go wild.
They do.
So bonus depreciation is this concept of with real estate, everyone knows that the richest people in the world the real estate guys are these rich guys who don't pay tax. They live in every town in the world. They're at your country club.
I'm not sure everyone knows that.
They don't know that.
You said, well, everybody knows, but I'm not sure that's common knowledge.
I mean, we had the president, who shall not be named, with the $750 tax return. That's
the one that lives in like a $4 million house in Palm Beach.
Well, yeah, exactly.
That's like 100 acres or something in Palm Beach.
Bingo. So that this concept of bonus depreciation is when you go buy a building, and the best example for dentists is you either pay rent to somebody or you own this building that you're operating your practice out of. Well, in 2017, the aforementioned real estate president created this law called the Tax Cuts and Jobs Act, which kind of reinstated this idea of 100% bonus depreciation. And furthermore, created a rule that bonus depreciation could be applied on used property. It used to just be that brand new development was bonus eligible. Well, now a building that was built in 1972 that you buy today is bonus eligible. And so bonus depreciation is this concept of taking your property and, deducting the depreciation today for 5, 7, and 15-year property that should be deducted over, a much longer time period. So
like 29 years or so. Is that the number that I've heard, or it depends?
Yeah. So, this gets into another big concept that we can dig into later, which is cost segregation. But, and we own this business, around cost segregation that we're working with you on, but of now I'm a physician or I'm a doc or I'm a dentist and I'm buying this building that I'm operating out of, whether it's an old house that we've retrofitted some chairs into, or whether it's a 50,000 square foot office building. If my practice is operating out of a building, the big problem with bonus depreciation is that it was only available to real estate professionals. But when you own the real estate, that is a business asset, you get access to that sweet bonus depreciation. So you buy this building, and this cost segregation study, we identify 5-year, 15-year, 7-year property, which is, special air handling systems, special TI, especially dentists have a lot of equipment and a lot of specialized
TI is tenant
equipment.
improvement. I'm just translating.
Oh,
Sorry.
yeah. Thank you.
No
and
problem.
So, the concrete outside, the asphalt driveway, the landscaping,
windows, the carpet, the wiring.
Bingo. And so we basically run an engineering study to identify what all of that property is. We assign a shorter tax life to it, and we allow the owner of the building to accelerate that depreciation into the year they bought the property, and bonuses stepping down year over year over year.
This year it's what, 80%, correct?
80%. Next year it's 60.
So a lot of dentists, Mitchell, own their own building, have never, and Craig and I have, a lot of experience with this, just talking to entrepreneurial dentists. They own their business and never have heard of something called a cost seg. And it's the biggest no-brainer if you have real estate, the biggest no-brainer in the history of Earth. It will save you. This is to your point about starting this. There's a reason why real estate professionals who are kind of constantly acquiring real estate don't pay much tax, because the tax code was designed to incentivize just this. And you're right, it's phasing out over time. But for now, the present we have from now until the end of the year is 80%, right? Next year it goes to 60%, which is still a tremendous amount. So I guess, are you talking about bonus depreciation in number 4 in the context of cost segs, or just in general? Is there anything else or is cost segs just taking advantage of the bonus depreciation law?
Well, so cost segs help. It's the cost segregation study is an engineering study that takes the asset and divides which components of the assets are eligible for bonus
on a schedule done by engineers. You guys have all that. Is that different than a 179, or is that on the same kind of principle?
So 179 is
which we're very familiar with in dentistry. Let me give you an example, Mitchell. We get calls from our sales reps around Thanksgiving, Craig, would you guess?
Yep.
And it's, hey, you should buy this $130,000 piece of equipment. It'll only cost you $10,000 down, and you'll be able to write off the entire amount. Is that bonus depreciation or 179 rule? Are they different?
They're a bit different. And I would say that's 5-year property, and it is eligible for 179. And 179 is not limited to 80% this year. So if you're a doc who
hasn't,
it's 100%.
Wow.
but it has limitations. You can only take about $1 million of 179, and after you've put
Only
about
$1 million, Pete.
Only $1 million.
only $1 million, and after you've put in $2.5 million of assets, 179 starts to step down. So the year you put a building into service, you may not be able to 179, but
But like for the sake of like the dental relevant equipment,
yeah,
a scanner at 30, a
Sure.
cone beam, $100,000,
The
150,
F-150 truck.
right?
the F-150, the Sprinter van with
The
Peter's
brass
face
pole.
on the side
Picks
of
up
it.
patience.
Yeah.
Yep.
Yeah.
Did you see that? By the way, it was
Maybe a
really
tractor,
distasteful.
Craig. Maybe
Yeah,
a tractor.
a tractor. Yep.
So yeah,
Mini excavator. I don't know. Just throwing out specifics here. So help us understand the $2.5 million. So you've got a dental practice. You
Yeah.
bought the building a long time ago. We're just talking 179 right now. We're shifting
Yeah.
gears. I can do up to $1 million per year in equipment,
Yep.
but no more than $2.5 million in the lifetime of that business. Is that what I understood?
This is the idea of bonus and this gets kind of almost so granular we probably shouldn't talk about it, but you have to optimize in the new world for bonus versus 179 as bonus is stepping down, because 179 is 100%. But if you know, and your accountant should and would do that for you. But yes, so equipment is 5-year property, and all of this equipment you're going to buy, and all of it that's going to be sold to you with financing plans and kind of cheap baked in debt because it's held on that company's balance sheet or whatever that means. Your sales rep who says, hey, buy this $130,000 piece of equipment, you got to put $10K down, and it's going to be a 2% interest rate, and it's a no-brainer. I mean, if you can go generate free cash off of that equipment, you should probably do it.
Yeah, and I also want to say, like, if it is 0% or a low interest rate or deferred payments or whatever, the year you buy it is the year you get to take the depreciation. So if it's same as cash for 3 years, you can actually take the tax, the abatement of your adjusted gross income and then pay for it over time. That's pretty cool.
So the idea of I'm going to walk into the Chevy dealership and plunk $1,000 down and drive a Tahoe off the lot on December 15th, I'm going to get $100,000 deduction this year. But the boomerang always flies back in that I'm going to be making payments for the next 6 years and not getting deductions. So, that, and let's talk about bonus depreciation in this kind of global sense, and then we can move on. But like, this creates a deferred tax liability. On your balance sheet, that's what shows up, in the sense that I took a deduction today that should have been taken over 5 years or 15 years. So I ate my lunch on Monday, and I'm going to go pay for it Tuesday through Friday. And so it's a great thing the year you get it. It reduces your cost of capital. It's an interest-free loan from the government. There's a lot of ways to think about it.
There's a recapture. Is that what you're saying?
Recapture happens, and just like we mentioned, if there's debt on the asset, you're going to be servicing that debt for the next 5 years with free cash that's post-tax, because you already enjoyed the tax benefits. So every one of these tools needs to be thought through, begin with the end in mind. But man, bonus depreciation helps you.
I mean, there's literally Craig and I would follow the same methodology. Literally, when I close on a piece of property, the next phone call when I'm driving home from the closing is to cost seg, is to you, that is the next thing to do. That's how impactful it is. And, like I said, we're now going to have, by the time this pod comes out, you can go to dentalcostseg.com, which is kind of designed for dental specificity of cost segs. If you own a piece of real estate, or you're thinking about a piece of real estate, or one day you want to have a piece of real estate, like, go to this website. Mitchell will hook it up. Mitchell, anything else on that? Not on the dental cost seg, but on bonus depreciation.
Like it's just, it's the eighth wonder of the world. It helps you take your money today and either put equity into a property or put a down payment on an asset that's going to hopefully generate you money and get a big old depreciation deduction this year. So
do you
that
think
can
there's
keep
any
growing.
chance, because Congress always changes, and this is not on the record by any means for you, that
Although
sometimes
we will clip it and make fun of you.
Yeah.
If you're
well,
wrong.
do you think there's
FYI.
any chance that at December, when they realizing interest rates are still rising, they need to stimulate the economy, and like him or not, Trump stimulated the economy by doing this, right? Do you think that there is a way to just say, you know what, we're going to hold or reinstate 100%, or you think they're just going to try and let it just die? I'm sorry, phase out.
They, there've already been, I think, in June, a bill went into Congress. There was proposed legislation to extend 100% bonus, but bonuses come in and gone out before, you know what I mean? And they've figured out that it's a button that works, but
to stimulate.
But like any button that works, if you just keep, if you're the rat hitting the cocaine button in the experiment, eventually, so I don't know, I hope it comes back. It's really, really good for me. It's good for my clients.
Before I go to number 5, Mitchell, have
Yeah.
you seen the movie Step Brothers?
Yes, not in a
Craig,
long time.
Craig, I would like for you to read number 5 for me, please.
Okay, the mega backdoor Roth. So the mega backdoor Roth. Everybody loves the backdoor Roth. This is your tweet, not mine, Mitchell. I have no vicarious liability for your choice of words.
Who doesn't love a giant backdoor, right?
Who
Okay,
does
go ahead.
a mega giant one?
Okay, you
I
got to
love
go
this
with
podcast.
it. It's okay. We'll edit all this out. We'll clean it entirely
No,
out.
we are not cleaning shit out.
I'm joking with
Oh.
you, dude. You can't clean this shit.
We're gonna send it to my Mimi, my grandmother. She's
Oh,
gonna
don't
be
do
she'll
that.
be so
disappointed.
proud.
Mimi, I just want you to know Mitchell wrote this, not me.
Yeah, you would. Dr. Craig would never.
I didn't write this. It's your tweet. The
So
mega
yes,
backdoor. Go ahead.
Craig
the
loves
mega
that.
backdoor, backdoor is, this is for self-employed business owners, meaning business owners who don't have a bunch of employees other than themselves.
Independent contractor.
Independent
1099.
contractors.
Float around to different offices.
Bingo. They had the locum shift people who just make great money on one or several 1099s. You are my people, actually. That's one of the best ways to do this.
Is this a SEP? Is this a SEP, like defined benefit plan kind of thing?
Similar. It's a 401k
Mhm.
that has kind of these two buckets, the 19.5 or the 25 or the 22.5 that you can put away on the employee side, and then the employer can make a match. And so the employer match maxes out at $66,000 for a person.
year for a Roth IRA.
So yes, so if you use the right
Jesus
plan administrator and you are a solo person, you can make the employer Roth contribution, you can make the employee Roth contribution, or you can make the employee ordinary IRA contribution. And then you had the opportunity to, on the other side, shove in $41,000 or $45,000 of Roth contribution.
And it's tax free or tax deferred?
So ordinary IRA.
Craig's laughing at you saying shove, by the way.
No, I'm not. No, I haven't. No, I'm
shove
not.
it in the back door.
No.
He's
Guys,
so laughing.
Stop.
What
Please,
is wrong
that's
with you?
No, I got a plain text. Don't say it. Don't implicate me in your stupid behavior.
This is
My question was
unbelievable.
specifically,
I gotta
you
go.
have to be careful of this because if you're you could be a single employee in one corporation, but have other corporations where you have other employees. It's you have to only explain that, Mitchell, just so people are getting excited and be like, oh, I have a single member LLC over here where I do this, but then over here I have 9 employees. Talk about that.
Yeah, so there's this thing called ERISA, the Employment Retirement Income Security Act of 1974, where a bunch of doctors were giving themselves Cadillac retirement and health plans, and then all the nurses on the other side were on Medicaid or something. And they figured out that if if the principals of a business are going to offer a benefit plan to themselves, then they need to offer that to the agents of the business as well. So if you have employees in cross controlled businesses, you have to offer the same benefit plans to everybody. So again, this is best for the locum shift, lone wolf. I go from office to office to office, and I'm sure y'all talk about this, but like I said, that's a great place to be if you want to make a lot of income and have like not have the responsibility of all of the overhead of growing a business, but it's hard to sell that business, right? If not impossible. And so the other thing I mentioned in this is a great opportunity if you make less than about $400,000, or if you're in the 32% tax bracket or under, the 24% tax bracket. This is a great thing to do if you're going to be a high earner for a long time. To Peter's point, the traditional kind of pre-tax IRA, you don't pay tax now. You shove it, right? Craig, relax, into that retirement account, and then it grows tax-free. And then it grows tax-free until you're 59 and a half, and then you can start pulling the money out, and you'll pay tax at ordinary
and you pay
rates.
the tax at that point. Point, right? And the Roth, you take out, it goes in.
You pay tax today.
You pay tax on the front end, and it grows tax-free.
And then theoretically, you never pay tax on it in your life, and your kids can pull it, finally, like liquidate that thing 10 years after you die. So that's the end game of the Roth. But again, so a lot of thought has to be put into that. But the idea that you can get $65,000 a year into a Roth IRA is pretty wild.
It's crazy. That's a great number. Number 5. Number 6, give yourself tax credits. R&D 45L 179D.
Oh my. Yeah. So the idea of R&D, especially in dentists, if you're developing process techniques,
3D printing, doing
new software, new pieces of equipment
that you plan to monetize one day, that are technical in nature, that are processes or techniques that are improving upon things that have ever been developed out there, then you are investing in research and development. And to the extent that you're either paying yourself or other U.S. employees or contractors, or that you have overhead costs in order to develop this R&D, you may be eligible for an R&D credit study. I'd say an R&D credit's about 7% of the cost. And the wonderful thing about it is it's a credit. It's not a deduction. But one thing that hit this year is this thing called 174, where you have to take those costs and add them back and amortize them. So the opposite of the cost seg of getting the deferred tax liability, you have to effectively create a deferred tax asset, which no one likes. So R&D is not as fun as it used to be. And
the tax credit, or the credit, is it a tax credit or a credit?
It's a tax credit, or I don't know.
Is it taxable income is what I'm trying
to... No, he's saying it's a credit, like wherever your tax bill comes in. If you owe, let's call it 100,000.
I just want to make sure it wasn't taxable income, like a credit, like
it's a dollar for dollar rebate. Basically, you go spend $100 and you're going to get a $7 tax rebate at the bottom, and you're still going to get those 93 cents of deduction as well. So they basically take a portion of your deduction, and instead of making it a deduction, they say, actually, this is going to be a credit, which is...
Got it. Understood. When did the R&D thing become less sexy? You kind of had like a little deflation at the end.
This year. And this is part of also the idea that they may extend 100% bonus. the Tax Cuts Jobs Act put in this provision that starting in the tax year 2022, there would be this add back of some of those expenses over 4 years that would be amortized. So it's a timing difference, but it just isn't as fun. And everyone held their nose for 6 years and 9 months, hoping that Congress would reverse the add back, and they haven't yet. Everyone still is hoping they will reverse the add back, but this is part of why you have to have a good CPA, because this stuff is just changing constantly, and trying to be on the cutting edge of saving people taxes is, it's a roller coaster sometimes. But so that's the R&D credit. The 45L credit and 179D, those are both credits in building energy efficient, either new stick frame kind of housing or office commercial building. 179D is commercial. 45L is for home builders producing.
Like a solar panel on the 179D would be, or no?
Solar's a whole different ballgame. No, these are building to Energy Star
like
standards.
LEED, like Craig's building, like LEED certification, stuff like that.
Yep.
Wait. I started paying attention again. I'm sorry. That LEED certification, my building was built in 2012, though. There's nothing left for me to do there, is there?
No, this is
all right. Keep going.
But if you're building that building today, you're going to get a per square foot.
I'm always ahead of the times. Jeez,
you're always one step ahead.
Yeah, you're just front running things, Craig. That's what we say.
Yeah. So those are, I think a lot of the new incentives in government are going to be pushed towards energy saving and building and development and
conservation, easements, non-syndicated conservations, carbon credits. I think the future is bright for that stuff. Not the syndicated ones that were flagged.
Yeah.
But I think, when I get on Delta Airlines and I read the pamphlet and they say they're 100% carbon neutral, I'm like, I can smell this jet from
you can see the big billow of but look, tax credits they're always evolving, and they're always going to be a thing, and sometimes they make a deal work that otherwise wouldn't work, where if you can reduce the cost of capital of building your practice building because you got a big old government stimulus, you ought to do it. The big guys do it. How do they build the baseball stadiums and all that? So number 7, fringe benefits. We're just moving right along, guys. So fringe benefits are, using credit card points. You use your credit card to go buy Google AdWords, or and then or to go pay for all of the expenses in your business. Well, you earn points for travel. You can use that travel for personal travel, or you can use those points for personal travel and not pay tax.
Can I ask you something now that we got a real life CPA, because Peter and I oftentimes pretend we are ones?
Good.
I've been saying this for a little while, and I hope I'm not wrong. So if you have that same business card, but instead of a point system, they give you cash back. That cash, is that tax free?
It's gone back and forth, and I wish I had.
Today,
I wish I knew.
Okay, no problem.
I'm just not.
I've always thought
at a certain scale, it becomes taxable, and especially if you pull the cash out and dump it into your bank account, it's taxable. So the best thing.
But the points are not. I mean, amazing. There's a lot of. Like Patterson takes my credit card, and Invisalign takes my credit card. Both
because it's not converted to a currency. I mean, that's the whole reason, right?
Oh, let's not go there. Don't even say that word.
Why?
Because you're going to go through I know we can't afford the time when we talk about currency.
Yeah. Okay.
Peter's a believer in the.
All right. Number 8.
The rebate thing's the way to go.
For sure.
You don't want them to put dollars in your bank account. That's always a bad thing. You never want that. But a broader concept of fringe benefits is, I used to have a job. I worked for BDO. I was an accountant for BDO, and I paid my own cell phone bill. I wasn't reimbursed. So I had to earn money, then pay tax, and then pay my cell phone bill. The day I became a business owner, I got to earn money, pay my cell phone bill, and then pay tax. So like that's the best fringe benefit for business owners, is that there's all these expenses that exist in your life where you're trying to better yourself and get better at your profession, and you have a home office and you have this,
and we talk about this a lot, not to take a huge tangent, but
sure.
like, you know, obviously dentistry, as you know, Mitchell, is trying to be highly consolidated. There's lots of people selling, right? And so what dentists forget when they're looking at the big juicy price tag of what someone's willing to pay is that all those, you become a W-2, and now all those business deductions that you enjoyed at the quality of life that you take for granted, the free, you know, the cable, the this, the that, right? The car, it's increasingly harder to take those deductions. So you lose those owner benefits in that big equation. So, you know, we always caution people, and Craig and I have been through this exercise, like, wait a second, we'd be missing out on X, Y, and Z, whatever it may be. So
hopefully you have speaking fees or some other kind of income that you can hang on to, but that's where we had
so basically you're saying if you're selling your practice, make sure you have a side hustle.
Yep. Yeah. I had a physician client who in 2022, they sold their practice to private equity. He's a W-2 guy now. He used to be a practice owner, and I was just like, well, thank goodness you're still tall and handsome, and drug companies will pay you to get on Zoom calls. So
that's right. To be a consultant.
that's his only source for deducting his gas and auto insurance. So
it's a really important algorithm to compute for those that are listening to this, to really understand the efficiencies of your business. And also when you transact it, you don't do the math on the taxes. So, you know, your business is worth $100, you sell it, you pay tax on it, you have $7 or $8 to invest. And then that investment comes through as ordinary income without any tax efficiency. So if you're really going to do the math, you know, Peter and I are a big team never sell guys, because the narrative is so pervasive that the tide's running out. You better jump in before it's too late. You better sell today. And oh, by the way, call me and I'll get a vig.
Yeah, everyone's jumping on the boat of like Mitchell,
because they're monetizing it too.
Yeah, they jump on, hey, sell your practice. You should do it. The time, like Craig's saying, like the time is now. And so we're trying to play the counter argument, because it doesn't make sense for a lot of people to fall into that panic. And so would
you want to go get a job? You already own your practice. You've already done a lot of the hard work. You can keep growing, or we'll hand you a chunk of money and now you'll have a job again. It's a tough.
Well, I mean, the math can make sense, but all I was saying, for the sake of the point I was trying to make, is that just put the tax implications into the math that you're doing. Is all I'm saying.
One time, I bought a small accounting book from a book of accounting work from a retiring CPA, and I just paid him a commission on gross receipts for the next few years. And I think he just wanted the money because he's an accountant, and he understood, hey, I'm basically no longer working. I'm not making that much money. I could just use the commissions as an earn out, so then I can deduct against them, and I'll have some money coming through for the next few years. So yeah, it worked out so far, I guess.
All right, number 8. Can you hit that horn again? Because I need a little energy here.
What do you mean? I
don't know. I feel like the energy's. This is the best shit right here. 8, 9, and 10 are my favorites.
The Augusta Rule, and this is a big deal so the Augusta Rule is called the Augusta Rule because there's a really nice golf course in Augusta, Georgia, and there's a big golf tournament there, and folks get out of town and rent their houses to golfers and golfers' families and people who are coming to see the tournament.
And we wonder how the rich get richer, huh? And that bingo. One town was able to lobby our government, right? Like,
yeah. I mean, that's the 6,700 pages of tax code where it could just say, hey, just pay tax on all the money you earn, less all the expenses you make. But no, now we have some 10,000 page bill that comes through Congress that then So we stick this little one in,
So
but
you can rent out your primary home.
You can rent out your primary home for 14 days tax-free. You can exclude the income. You don't have to report the income on your personal return at all. And so what businesses do, this is TikTok CPA right here. So and there's some, I've never seen a tax court case where this really gets completely torn apart. But the idea is I could create a contract between me, Mitchell Baldridge, and my business, Better Bookkeeping, where Better Bookkeeping agrees to rent out Mitchell Baldridge's house for 14 days for a market rate of $2,000 a day. And so Better Bookkeeping gets a $28,000 deduction, and Mitchell Baldridge gets to exclude the $28,000. That's the simplest form of it. And
Craig, will you rent my home and I'll rent yours?
Well, something
Bulletproof, baby.
But I'm actually doing, all kidding aside, I do doctors' dinners and stuff like that at my primary residence. So I do, whether or not, I don't know if I actually use the Augusta Rule for that.
I don't think I do.
But I actually have, like, my Christmas dinner will be there for the doctors.
Oh, that's great.
Yeah.
And so, the idea is, do you have a business case for it? Do you have a lease agreement? Do you have all this stuff? Does money change hands?
Sometimes it's so, like my, it just depends on how much monkey business you want to do. I mean, look at what's your fair market value of your house? I mean, if it's Pete's house, it's probably like what a night, like $175, honestly. Like, what do you think?
A day's in?
Yeah, it's probably.
I'm thinking like a Super 8.
My little shack probably is probably $150.
Okay, so $120 times 14.
Is it worth?
Is it worth the $400 in taxes you're saving? I don't know.
Pete's at the 15% rate too. So
right.
Think about that. Yes. So look, I probably get.
He's on my side now, Peter.
This is terrible.
You are an equal opportunity harasser, Mitchell. You're going to be a frequent guest. Can we do another pod?
Yeah, hopefully y'all can both turn on me and we can.
You got
inspect
nothing,
my
man.
molars or something. But
that's true. Send us a picture of the back of your mouth. We got to rag on you for something. You see that marginal ridge, Peter? It's like got gray decay through it.
Look at those buccal flat pads. Oh my God.
Go ahead.
No. Sticky beds or whatever.
Sticky grooves is what you're trying to say, right? Yes.
Oh my, listen, Mitchell, we can't have you talk any. We are CPAs compared to how you are as a dentist.
Yes. I hope so. I use the
sticky
little
beds.
I use the little flosser.
Don't even say it. Proxibrush. Don't even say it. You're subtracting value from your vast array of knowledge.
So I hope that I say this somewhere at the end of this, but yes, I love this idea of return on hassle that I need to trademark. But it's like I give all these tax tips out, and then when people come back to me and want to talk about the Augusta Rule, I'm always just kind of like, man,
is it really worth it?
Let's start at something bigger. Let's go buy a building for your business rather than try to.
I love that.
Cram through a 28,000
There's the strategy that you were underselling. You're like, dude, don't do that. Right? Like, do this.
You said it yourself. You said this is TikTok CPA.
Well, I'm like, I know I some things you just got to do for clicks, man. It's unfortunate, but a $28,000 deduction is cool. But you know what's really cool? A $2.8 million deduction. So let's do that. So speaking of 9, we've buried the lead. PTET, pass-through entity taxes, these SALT cap workarounds.
Wait, so number 9, PTET?
PTET. Yeah.
And SALT cap workarounds. Okay.
No idea.
We're about to dig in. We're getting into my world. But like, so
Craig doesn't like details, Mitchell, just so you know. It'd be me and you having.
He's going to love this. So state and local tax cap workarounds in 2017, when they did this whole Tax Cuts Jobs Act, they took the state income taxes or property taxes that you could deduct, and they put a cap on that of $10,000 a year. So everyone in high income tax states was really, really pissed off, like New York and California, where they pay 13% state income tax, and they were able to deduct that for federal purposes. Well, that deduction went away. So everyone's even though they lowered the taxes, it was a tax cut. A lot of people in California and New York who pay a lot of taxes, lo and behold, their federal income taxes go up. Well, what those states did to counteract this regime is they said, well, if you own an S corp or if you own a partnership, you can elect to pay taxes at the S corp level or the partnership level, and then you can deduct them as state taxes, because you're allowed to deduct state taxes in your business, but not personally.
Not applicable for the three of us living in Georgia, Texas, and Florida.
We live in America, but these other people, yes, it's very applicable when you're in a high income tax state like California and you're paying $250,000 a year of state taxes. If you can figure out how to deduct that at your business level rather than not deducting it on your 1040, you're saving.
We have a lot of California Bulletproof people, a lot in our mastermind. So pay attention to this PTET salt cap workaround.
Yeah,
so it's fair to say, just for conservation of the limited brain cells I have, that as a Florida resident without state income tax, this is not applicable for me.
Keep enjoying your life, man. But but if you're in California, you can take your state tax rate from 13.1%.
We're at Mimi. Listen to this.
I don't know why you're saying that, Georgia. We told this, and we deduct. They just elected to deduct it on the corporate level.
Yep.
So I mean,
Georgia has state tax.
I've done that in several of my entities. All right, Mitchell, we're wrapping it up. Number 10,
the best for least.
Real planning and good advice. There's no substitute. As your business grows, so you got to spend more time on stuff like this, and you got to have good help. I can brush my teeth at night, but I don't even know what a sticky groove ridge is, so I got to go to a dentist.
Well, that's a good way. It's a good point, not on the sticky thing, but like, look, sometimes you outgrow. That
was a terrible point.
That's what he said, basically. I like this part of what you said. The other thing was Mitchell, absolutely stupid.
You moron.
But hear me out. So sometimes, like, we get married to people, for example. You're my tax guy or tax girl, and like you ride with them, even though you may evolve into more of I'm not saying you have to pivot CPAs, but like what got you here won't get you there, meaning that as your business becomes larger, there's more complexity to your ecosystem, and therefore there's more opportunities with someone who could, like yourself, someone who's more strategic, that's looking ahead and forecasting and saying, hey, think about this and costs like this. It's a different level as versus like, hey, I have a CPA and they do my W-2. Well, okay. Like, no shit. I could do that.
TurboTax.
TurboTax.
So, and look, here I go into it. As you consider any tax strategy, keep return on hassle at the top of your mind. Mm-hmm. So as you scale up, you may need a better tool or a better team or a better group of people to really do what you're trying to do. Sometimes really, really good advice can cost you, but it can also save you. And so, then, I go into my plug of better bookkeeping, and I'll do the same here. We were talking before, you guys gave me this killer kind of like benchmark P&L standard that I've been looking at and that I've been working inside of better bookkeeping, trying to like layer on an interface specifically for dentists. We're working on that, and hopefully by the time this comes out, we're going to keep tuning that up. So if you go to betterbookkeeping.com,
I want to bring up this is your panel.
Oh yeah.
So this is the dashboard, right? Which dentists love a graphic. We love information, especially when it comes to this. And like so many of us are used to getting your P&L a month after the month passed. And it's like, hey, did you look at your P&L? And you're like, yeah, but that shit happened 30 days ago. Like, it's really hard to take action, especially when I don't know what these numbers mean and it's not broken down into a percentage. Am I doing well? Am I doing bad? And so like, this is where, we are big fans in our practice, Mitchell, of having it's called practice analytics or business intelligence software, probably in the business world, right? Where it tells you, we dig in and you look at like, how's my chair performing and how's this operator performing and what's this conversion rate? But we don't have the same level of sophistication and UI, the user interface for the most important thing. And so that's why I love this. I love being able to get this on a graphical level where I know to take action and where to plug holes maybe. So sorry to cut you off, but I wanted to cut that up.
So if you want to, work with us at Better Bookkeeping, come on board. And if you do, tell us that you want the bulletproof
template.
The bulletproof template, and we're gonna set you up with that, and we're gonna just get this thing humming. Kind of a special chart of accounts for dentists, and to, like y'all had mentioned, to break out the benchmarks of, we need to put all the hygienists in one bucket. We need to put the assistants in one bucket. We're going to put all the,
and also
my pet peeve with data. My pet peeve with data, Mitchell, is it causes a lot of paralysis with people, right? And it's like, okay, I see it all. It's great. It's sexy, blah, blah, blah. But like, what do I do? Right. And so letting someone get information to actually take action is the first step to becoming bulletproof, in my opinion. Like, okay, see the problem, fix the problem, versus like, I don't even know what I'm looking at. So that's why I'm a big fan.
Like how to win too, Peter. Like, so it's not even an action point of what do I do? It's what is normal. The most basic conversation is what, I talk to people. If you don't know your numbers, you don't own a business. You can't say you're a business owner. If you're just flying blindly, you just can't. And you just need to know what is a win, and it has to be a range, because maybe you want to give chapstick and sunglasses or a free sonic toothbrush to every practice, and that's a patient rather. And that's okay. Your business has to be optimized for what you want. And we're never going to tell you this is the exact profit you should be at, because profits are range. It should be from blank to blank, depending on how you want to run it. Right. And, Peter, our practices could be a lot more efficient if we took away the things that we must have there.
Right.
Like our summits could be a lot more profitable if we didn't have them at the Win in Las Vegas. But
you and I have them at
Ramada.
Ramada.
My house, actually.
Pete's house,
$125 a night. But what I'm trying to say is that the metrics are important, and there's not an agreed upon set of them. So I'm really proud of this endeavor, because it took me a long time of my own ass kicking. And then it also took me a long time to understand entrepreneurial profit. Because like we said at the beginning of the pod, most dentists don't pay themselves.
Sure.
So they work for free. They produce with their own hands $1 million, and they see what's left at the bottom line. Like, holy shit, I run 70% profit. No, you don't, dude.
Yeah.
Or if you do, you want to work for me for free. And then it's like an aha moment. And if you're thinking that you want to scale your business beyond the job that you've created for yourself, you must know your numbers. Because and I'll tell you the story, Mitchell, and then I'll stop talking. When I had a top line of $2 million, I was making like $600,000 a year. And when I got to 4 million, I made half that. And then I got to 8 million, made a quarter of that. I'm like, okay, it's not a linear exchange.
This isn't scaling the way I thought.
Yes.
Hopefully you get to 15 and you can, pay $650 to show up to work. But
exactly. At this rate, exactly.
or maybe you'll get, hopefully it just goes all the way to zero and then just levels out. But
I corrected it, but it was painful. And our goal, as we said in the beginning of the pod, is Peter and I just don't want these bumps and bruises for everybody that's listening. We didn't have a podcast to hear. We had to learn the really, really hard way.
It's funny that you guys have this bulletproof benchmark, and it's effectively 30% goes to labor, 30% goes to overhead, and
exactly
40%
profit. Yeah,
and that's a lot. Like how an
all
accounting firm
is the same.
Yeah, an accounting firm would run the exact same way of 30% to labor, 30% to overhead.
I've had entrepreneurs come in here and be like, okay, how many employees do you have? Okay, blah blah blah. He's like, I bet your top line is blank. I'm like, holy shit, how do you know that? He's like, because all businesses. I think that was Scott Galloway that did that.
Oh sure.
He's like, he goes, this place smells of low profit margin. He said that to me. He's like, wow, the chapstick is really nice.
You think that's low profit? You should come to one of our summits.
Yeah. Well, a summit's designed to give back. Well, our practices are too. Hey, listen, we're doing okay. We're doing okay.
But if you get the numbers in front of you and you realize, oh, I should be at 30% salaries and I'm at 42%, you have some choices. At least you could go, well, I guess I need to bring more money in the door, or I need to raise prices, or something's not giving. Maybe I haven't been raising prices along with the cost of eggs. You know what I mean? Like, or, and to your point, Craig, when you run into that buzzsaw of actually knowing the numbers, it is painful to kind of unwind, but at least
And we try to
on
distill down too, Mitchell, like, because I think when you were presented with 100 metrics, 100 KPIs, 100 things, guess how many of that we look at and address? 0. So we try to distill our things down, like, look at these 5 KPIs, but the same thing applies to this software, right?
Yep.
Like, I think dentists are very willing to address the problem. Sometimes we just don't have the right information that's going to move the lever that's actually going to improve your life. Like, it's that simple. And I think that's why I'm a fan, and well, I guess we can button it up, but yeah, man, I really appreciate you spending the time with us today. I think those top 10 things are cool, and it gets people ideating about what they have in their own ecosystem, what they could save on. Maybe it's good questions to audit their own CPA, right? To kind of be an intelligent consumer of not just the bystander of, I got my taxes done. It's a dialogue with your CPA. It's where can we look for strategy, right? Because not everyone needs to switch. But sometimes it's just being involved, just like you should be involved in your marketing and not completely outsource that, just like you should be involved in your operations manual, all those things. You can't just outsource, like, oh, my CPA does that, I'm not involved. You need to be involved. You need to be involved.
I think that, if you take away nothing from this, it's like, you should just call your CPA and walk into their office and try to have a 2-hour meeting with tell them, hey, bill me for 2 hours. We're going to sit down and we're just going to run through everything. I want to understand my books. I want to understand the last year's tax return. You may find that your CPA just won't have the capacity to do that. In which case, you may start looking for a different CPA or a coach or somebody who can help you outside of that to really kind of get your hands around what is going on in your business and what do you need to start focusing on. And
are there holes to plug, and what are they? And I'm willing to do that, but like, help me identify them, sir.
Yep.
Ma'am.
Yeah, I think the other thing too that you touched upon is advice is oftentimes the least expensive thing to pay for than bad experience. I have a doctor who remain nameless that just is really priding himself on the fact that his CPA, it's like TurboTax or whatever. And then like when I started asking him things like, hey, have you done this? Have you done that? Have you done this? He's like, oh shit, I didn't even know about that. Why is he not telling me this? I'm like, what do you pay that guy? Like, like what, like, don't get mad at him. Like he's, don't go to Jiffy Lube and expect that you're going to get like,
your Ferrari,
your Ferrari. And at a certain point, yes, it's important to be frugal with your investment advice, but poor advice costs you, or no advice costs you, in experience, emotion, and time. This person made a mistake. This rule that he didn't, there's a thing in Florida called the homestead exemption. He didn't know to file for it. I'm like, they didn't tell you, so he hasn't filed for it. So without going off a tangent, his taxes on his house went up by like $10,000 a year for several years. So he could have afforded to pay.
Challenge it.
Yeah, I'm sorry.
You didn't challenge it, meaning going to.
Well, they never even knew it was his personal residence. He was getting taxed at a totally different scale,
and they don't know about the Roth, and they're all and I'm like, you're proud that you spend $3,000 on your tax advice, but you could have saved hundreds of thousands of dollars. Good advice, our mastermind.
You could have restructured the whole way your business model works, and you could have been making $400,000 more a year for the last 5 years, or for the next 5 years.
Mitchell, I have a question for you.
Yes, sir.
That I advise people on. I want to make sure I'm not, because I did this a long time ago. A lot of people listening have student debt.
Yeah.
Okay. A lot of people now, and that rate may not be very favorable. As we know, student loans were just re-implemented. Right. But a lot of us, because of COVID, the silver lining was that there's equity in the building if you own that house pre-existing. So now you have equity. Is it okay? Could you get an interest rates? You can, for student loans, or at a certain point, you phase out of that if you make too much money.
Yeah.
Getting a HELOC to then pay that off?
Yeah, it becomes tricky because the way that you look at building interest, if you take refi proceeds and you could take refi proceeds and invest it into the working capital of your business, and then you could pull all the working capital out of your business as a distribution, but you're not going to be able to like one for one take a business loan and pay your student loans and deduct that business interest. But you probably have money somewhere doing something.
It's just a big issue in our industry, and so I just was,
there are creative ways to think about it. I like where your head's at.
Hey, well, can you come back on the pod and let's do another one, because I want to unpack. I think there's some more levels of cost seg and bonus depreciation. It won't be an hour and 15 minutes like this one, because I think this was Craig does not have the attention span for all these details. So we'll keep it really pithy and short, right? But see, this is my job back.
I didn't realize you guys are still talking. Sorry.
After my
we wrapped.
My night.
It's nighttime. Just the sun is setting.
But would you come back on and kind of unpack that a little more? Because I think there's I know a lot of dentists who have real estate, and a lot of people have not taken advantage of cost seg. So I want to kind of keep unpacking that as to how it works and why it works, so that it's not like this hocus pocus like mystery thing, and really for people to take advantage of contacting you on dental cost seg, right, where there's dental specificity to kind of helping determine where their best benefit may be. So
that would be fantastic.
I mean, it'd be short. I think maybe 30 minutes just to kind of really kind of unpack it a little further. And Craig, go ahead.
Look, dental costs, cost segregation is not TikTok accounting, like the other thing I mentioned, but like it is a specific tool for a specific user. But dentists are folks who are high income and dentists love to get into real estate. So to the extent that we can use that tool for you guys and help you get the most out of it.
Let's talking about I'd love for you to talk about maybe even outside opportunities, like opportunity zones or RV parks and different like things like that, just as a real quick thing. And I know I saw
C-store exemption as well, if you don't mind, throw that in there. C-store exemption. I love that stuff. The car wash and the gas station.
Maybe Craig came back alive.
No, I get excited sometimes.
Okay. I know you connected with Jeff Anzalone. I saw that in your Twitter feed. And he and I are friends. I know he's very passionate about real estate and does RV stuff. And he's a periodontist down in Louisiana. So anyway, I'd love to get you back on. We'll coordinate offline. And I really appreciate you, bud, leaning into the dental community. And thank you. Yeah, thanks for your time. I appreciate y'all having me. And follow at Baldridge CPA on Twitter. I'm always tweeting about stuff. And thank you for the chance to get on and talk to your community. Yeah, buddy. All right, everybody. We'll see y'all next time.
Thanks, guys.